Welcome back to the deep dive. Today we're diving into something that's probably on a lot of investors' minds. Is Walmart stock a buy or what? We've got this recent report, and we're going to break it all down for you. So Walmart is currently trading at $97.69, coming off a pretty strong Q4, but there are some mixed signals about the future. It's not always a clear-cut
Yeah,
buy or sell situation.
exactly. It's not black or white. That's what makes it so interesting, right?
Definitely keeps things interesting. Okay, so let's dig into the good stuff first. That Q4 performance was impressive. 5.3% revenue growth, operating income up 9.4%. Those are some healthy numbers.
They are. And it gets even better because those numbers are in constant currency. So it's a truly global comparison, apples to apples. And that 16% jump in e-commerce sales, that's really something Walmart isn't just keeping up online. They're actually killing it.
That's a great sign, especially with how competitive the e-commerce landscape is these days. Now, this report also mentions Walmart's economic moat, which is apparently wide. Can you break that down for our listeners who maybe aren't finance gurus?
Sure. Think of an economic moat as a company's superpower. It helps them keep making money even when competitors are trying to steal their customers. Walmart's superpower is their sheer size. I mean, they control about 25% of the U.S. grocery market, which is just massive. Then you add in their incredibly efficient supply chain and their brand recognition. It's pretty clear why it's so hard for competitors to even come close.
So basically, they're the undisputed champions of low prices, and that gives them a huge edge. Got it. So let's shift gears a bit and talk about the future. What's this mixed outlook we keep hearing about?
Well, Walmart's projecting sales growth of 3–4% for the next fiscal year, which sounds decent, but keep in mind last year had an extra day because of the leap year, so sales got a little artificial boost from that extra day. This year that boost is gone, so the growth appears a bit smaller when you compare it. You also have to factor in the acquisition of Vizio, which adds some complexity. And of course, currency rates are always fluctuating, which adds another layer of unpredictability.
Makes sense.
Yeah.
So it's not just a straight climb to the top.
Yeah.
What are the key factors actually fueling Walmart's growth moving forward? What should investors be keeping an eye on?
This report highlights three key areas: Walmart plus Pegasus, their membership program, the online marketplace, which is growing rapidly, and advertising revenue, which is becoming a bigger part of their business. These are smart moves because they're all higher margin businesses. So Walmart makes more profit on each dollar of sales in those areas compared to something like selling groceries.
So it's like diversifying their income streams.
Yeah.
Kind of like how we talk about diversifying investment portfolios.
Right, exactly. And it's not just about spreading the risk. These new initiatives actually make their economic moat even stronger. Think about it. Walmart Plus makes customers more loyal and more likely to spend more. The marketplace brings in third-party sellers, which expands their offerings. And advertising revenue allows them to tap into their massive customer base. It's a win-win-win all around.
It sounds like they're playing the long game and really thinking strategically. But every business has its challenges. What are some of the storm clouds on the horizon for Walmart?
The report flags three main areas of concern. First, there's the overall economic uncertainty that everyone's talking about. Consumer spending is a big question mark. Second, there's pressure on their profit margins, especially as they sell more groceries, which tend to have lower margins. And finally, there's the constant battle of managing expenses in a world where everything seems to be getting more expensive.
So it's not all sunshine and roses. I imagine with a company as massive as Walmart, there are going to be differing opinions about their future.
What are the bulls and the bears saying about the stock?
Well, that's where things get really interesting. The bulls are pointing to Walmart's unbeatable value proposition, that wide economic moat we talked about, and their strategic investments in those high-growth areas. They see Walmart as a steady ship in potentially stormy seas. But the bears are more cautious. They're worried about those macroeconomic headwinds, the pressure on margins, and the fierce competition from online giants like Amazon. So it's a bit of a tug-of-war between those who believe in Walmart's ability to weather the storm and those who are more worried about the storm itself. What's the report's overall verdict on the stock?
After weighing all the evidence, the report takes a neutral stance. They've set a fair value estimate of $96.93, which is pretty close to the current market price of 98 cents. It's not a screaming buy, but it's not a sell signal either.
Neutral? Okay, so no dramatic pronouncements there. What does that mean for someone like me just trying to decide if I should buy, sell, or hold?
It means you have to go beyond the headlines and really dig into the details. Consider your own investment goals, your risk tolerance, and how you think those key factors that we talked about, consumer spending, inflation, and the success of Walmart's strategic initiatives, how those are going to play out.
So it's about understanding the nuances and making an informed decision based on your individual circumstances. We've covered a lot of ground in this first part of our deep dive, but we've only just scratched the surface. What's coming up next?
In part two, we'll dive even deeper into those analyst opinions, explore the bull and bear cases in more detail. We'll also look at how Walmart's strategic initiatives are actually playing out in the real world and what that means for their long-term growth prospects.
Sounds like we're just getting started. Don't miss part 2 of our deep dive into Walmart, where we'll unpack even more insights and equip you to make informed decisions about this retail giant.
Remember those contrasting analyst viewpoints we touched on earlier? It's like they're looking at the same company through totally different lenses.
Yeah, it's definitely intriguing. What are the bulls seeing that's making them so optimistic?
Well, first off, they see Walmart as kind of a safe haven during economic uncertainty. When people start tightening their belts, they tend to gravitate towards those retailers offering the lowest prices. And that's where Walmart really excels. I mean, their ability to squeeze value out of their supply chain is legendary.
It's true. I always end up at Walmart when I'm trying to save money on groceries.
Yeah.
The bulls must also be factoring in those strategic investments we talked about, right?
Absolutely. The growth of Walmart plus their online marketplace expansion and that rising advertising revenue, all of that points towards a more profitable future. They see Walmart evolving and adapting to the changing retail landscape.
So they're not just sitting back and relaxing. They're actively staying ahead of the game.
Exactly. And another thing the bulls are excited about is Walmart's commitment to technology and automation. Their investments in AI and supply chain optimization, those are seen as key to driving efficiency gains, lowering costs, and ultimately boosting their bottom line.
Sounds like they're in it for the long haul and setting themselves up for success. But what about the bears? What are their main concerns? They can't just dismiss all of these positive developments, can they?
Of course not. The bears, as you might expect, are a bit more cautious. Their biggest worry is the potential impact of macroeconomic uncertainty. Even a giant like Walmart can't completely escape the effects of a recession or prolonged inflation. Consumer spending could take a hit, and that would inevitably impact Walmart's sales and profitability.
Right. And we talked about those shrinking gross margins earlier. That seems to be a concern for the bears, too.
Definitely. That shift towards grocery and health and wellness sales, which typically have lower profit margins, that's a constant source of concern for them. Walmart's trying to mitigate this, but the bears believe it's a trend that's likely to continue, potentially eating into their overall profitability.
So it's a balancing act between keeping prices low and maintaining profitability.
Exactly. And the bears also bring up concerns about expense management. They acknowledge that investments in technology and automation are necessary, but they question whether those investments will pay off quickly enough to offset rising costs in areas like labor and logistics. It's a valid point, especially in a tough economic environment.
So we've got the bull case, the bear case. It's almost like two sides of the same coin. But how does all of this translate into stock recommendations? Are analysts giving clear buy or sell signals based on these differing views?
That's a great question. If you look at the report, you'll see a range of price targets from various analysts. The average target over the past 6 months is $95.15, which is pretty close to the report's fair value estimate of $96.93.
Okay, so it seems like there's some general agreement among analysts, even with their differing viewpoints. What stands out to you in all of this data? What's catching your attention?
What fascinates me is that tension between Walmart's inherent strength, that wide economic moat, their efficiency, their sheer size, and the uncertainties of the broader economy. It's a classic case of a company that's both a market leader and vulnerable to forces outside its control. It's a high-stakes game.
It's like watching a tightrope walker. Impressive, but you can't help but feel a bit nervous for them. So for our listeners trying to make sense of all this, where should they focus their attention? What are the key things to watch?
I think the key is understanding how Walmart's navigating these competing pressures. They have to maintain their value proposition, those low prices that customers expect, while also expanding into higher margin areas and investing wisely in tech. It's a complex equation.
It's not just about the numbers then. It's about the strategy behind them.
Absolutely. And that strategy is constantly evolving. Take their recent announcements, for example. The same day pharmacy delivery launched new shipping offers from Sam's Club, those experiments with AI-powered inventory management, even developing new coding tools to boost developer productivity. These initiatives show that Walmart isn't content just resting on its past successes.
Wow, it sounds like they're really pushing the envelope and staying ahead of the curve. But how do these initiatives fit into the bigger picture of Walmart's long-term growth?
If we connect those dots, we see a company trying to build a more resilient, more diversified, and ultimately more profitable business model. They're expanding their ecosystem, going beyond that traditional brick-and-mortar store experience to offer a broader array of services and products. They're not just a store anymore. They're becoming a platform.
That's an interesting way to think about it. A platform designed to meet the changing needs and expectations of consumers.
Exactly. It's about convenience, speed, and value. The things that modern shoppers really want. And Walmart is positioning itself to deliver on all those fronts.
So we've got the bull case, the bear case, and this platform perspective. What does it all mean for the individual investor? What are the practical takeaways here?
The key takeaway, I think, is that Walmart is a company in transition. They're a well-established giant, but they're also actively transforming to thrive in this rapidly evolving retail landscape.
It's like watching a caterpillar transform into a butterfly. They're going through a metamorphosis. Before we move on to the final part of our deep dive, are there any other important details or data points from this report that we should highlight?
There is one more detail that I think is worth mentioning. Remember the concerns about macroeconomic uncertainty and the potential impact on consumer spending? Well, Walmart's is very aware of this risk, and they've addressed it head-on in their recent earnings calls.
So they're not just ignoring it and hoping for the best.
Not at all. They're actively monitoring consumer behavior, analyzing spending patterns, and adjusting their strategies accordingly. They're taking a measured, data-driven approach to navigating those uncertainties, and this approach is reflected in their guidance for the year ahead. They've built in some conservative assumptions about things like inflation, consumer spending, and even avian flu, which can impact food prices.
So they're trying to anticipate those bumps in the road and prepare for them.
Exactly. And that, I think, is a key takeaway for anyone considering Walmart as an investment. This is a company that's not just riding the wave. They're charting their own course with a keen understanding of both the opportunities and the challenges ahead.
I love that analogy. Walmart, the master navigator of the retail seas.
Yeah.
Okay, we've explored the bull case, the bear case, the platform idea, and now this master navigator concept. I'm feeling pretty well informed. What are we diving into in the final part of this deep dive?
In the final part, we'll delve into one of the most intriguing and potentially game-changing aspects of Walmart's future, the upcoming IPO of PhonePe, their fintech arm. This could be a major catalyst for growth and value creation, but of course it also comes with its own set of risks and uncertainties. It could be a game changer, but as with any investment, there are always factors to consider.
Oh, that's exciting. A potential spin-off with PhonePe, which is huge in India.
Yeah.
This could be a whole new chapter for Walmart. I'm hooked.
Yeah.
And I'm sure our listeners are too. All right, so we're back for the final part of our Walmart deep dive. And we're ending on a high note, or at least a potentially high growth note, with that much anticipated IPO of PhonePe.
It's definitely a development that has investors paying attention. PhonePe, for anyone who might not know, is Walmart's digital payments platform. It's huge in India. Over 450 million registered users.
450 million. That's massive. More than the entire U.S. population. No wonder this IPO is creating so much buzz. Before we get to the nitty-gritty, can you give us like a quick rundown of what PhonePe actually does?
Sure. So PhonePe basically lets users do all sorts of financial transactions right from their smartphones. You know, peer-to-peer payments, mobile recharges, bill payments, online shopping, even investments and insurance. It's basically become the go-to platform for all things fintech in India.
So it's like a digital Swiss Army knife for your finances.
Yeah.
That's all happening within Walmart's ecosystem. That's pretty amazing.
Yeah.
Why the decision to spin off PhonePe through an IPO, though?
Well, there are a few reasons. First off, PhonePe has seen incredible growth over the past few years. It's a valuable asset for Walmart, and this IPO allows them to unlock that value and create a separate, publicly traded company.
So it's a way for Walmart to cash in on PhonePe's success while also giving the platform more freedom to grow.
Exactly. That independence is really crucial. By operating as a separate entity, PhonePe can really focus on its core mission, pursue its own growth strategies, and attract top talent in the competitive fintech world.
It's like letting a bird out of its cage so it can really fly.
Yeah.
But what about the risks? Every IPO has uncertainties. What are some of the things that could go wrong?
Of course. One of the main risks for PhonePe is the regulatory landscape in India. Fintech is evolving so quickly, and there's always a chance of new regulations coming in that could impact their operations or their profitability.
So it's a bit of a wild west out there in terms of regulations.
In some ways, yes. But PhonePe has a good track record of navigating the regulatory environment in India. They've built up a solid reputation with both consumers and regulators.
That's good to hear. But what about competition? India's fintech scene is booming. Are there other players that could threaten PhonePe's position?
Competition is always a factor in any growing market, but PhonePe has some key advantages. That huge user base, the strong brand recognition, and the fact that it's deeply integrated with Walmart's ecosystem.
So they're not starting from scratch. They've got a head start and some serious backing.
Exactly. Plus, you can't forget about Walmart's expertise in logistics, supply chain management, customer service. All of that is super valuable for a fintech company operating in a complex market like India.
Okay, so we've got a high-growth fintech platform, a potentially lucrative IPO, and some inherent risks. What's your overall take on this PhonePe spinoff?
I think it's a smart and strategic move from Walmart. They see the value in PhonePe and they're creating a path for it to really take off. But we have to remember, IPOs are unpredictable.
Don't go betting the farm on it, but definitely keep an eye on it. For our listeners who are trying to connect this PhonePe IPO back to Walmart's overall investment picture, how should they be thinking about it?
That's a great question. I think the PhonePe IPO adds another layer of intrigue to the whole Walmart investment story.
Hmm.
On the one hand, it could be a source of significant gains. If PhonePe does well as a public company, that could boost Walmart's overall valuation and create value for shareholders.
So it's a potential bonus,
Yeah.
the cherry on top.
Exactly. But on the other hand, PhonePe is just one piece of the Walmart puzzle. The core retail business still drives the majority of their revenue and profits.
Right, it's about balance and perspective. So as we wrap up this deep dive into Walmart, what's the key message you want to leave our listeners with?
I'd say this Walmart is a company that's always evolving and adapting. They're not afraid to seize new opportunities, even in industries that seemed totally separate from their core business. This PhonePe IPO is a perfect example. It's a reminder that Walmart isn't just a retailer. It's a dynamic, forward-thinking company with a global reach and a really diverse portfolio. And if you enjoyed this deep dive on Walmart, be sure to subscribe to the deep dive for more insightful analyses of fascinating companies and industries. Hit that bell icon so you don't miss our next episode.
That's right.